Manager Equity at Quantum AMC. And Christy, thanks for joining us. Good afternoon to you. And next week onwards, we're stepping into a fresh new financial year. Give us a broad sense of what kind of nifty moves or broader markets move you're expecting to see when it comes to FY26 and this steep correction that we've seen in the last quarter or so, or FY25. Do you believe that that is positively behind us for good now, and FY26 is only building on to the kind of reversal that we've seen from that sell-off over the last couple of weeks in trade?
Yeah, so thanks for having me. Good afternoon. So if we've seen the past few months, there have been significant selling that has happened in a lot of pockets, and the selling is quite pronounced in the broader market, the small and mid, as opposed to the large cap, though they are also corrected. So when we are looking at our portfolios at the moment, so the upsides that we see from each of our stocks in the portfolio looks significantly better than it was, let's say, a few months back. And there are some news flows, especially the major one being tariffs and so on and so forth, which has impacted some part of the sectors. And, that is one of the major concerns across the globe, if you were to see it. But if you were to think about it, India, in a way, is relatively bit insulated. There could be certain pockets like auto and pharma, which could be impacted. But one of the major, issues that is happening across the globe, India seems to be relatively not so affected in that sense. So with that as a background, if you were to look at valuation at a current point in time, and especially if you look at the large cap liquid pocket where we kind of operate in, through our products. So there, what we see is, the valuations are nearly fair in most of the sectors, especially if you look at the financial space, which is kind of a large overweight. Things are much fine on the valuation parameters. But I wouldn't say that is true in small and mid, where the significant correction could, it can come. The other point is on the earnings trajectory. If you were to look at it, the past 2 quarters have been pretty bad in terms of, the earnings pickup, and there could be several one-offs, that had plagued the earnings in those particular quarters. But incrementally, we are expecting a gradual pickup that might happen. Now, earnings are not going to come in a hurry, but there would be a gradual pickup that we see. So if you were to look at the large cap space, a combination of earnings growth and the valuation being relatively okay, I think one can expect reasonable returns going ahead in the large cap liquid part of the bucket.
Right, Christy. So large cap bucket is the space that you're betting big on. This is Sumita here from our Delhi studios. I want to understand from you what lies ahead for the month of April. You've given us a broad perspective, but what else besides these April 2nd reciprocal tariffs? What are going to be the other key triggers, and hence which sectors are you betting big on?
Right. Yeah. So again, month to month, we have a longer term horizon when we look at are adding to stocks individually. So if you were to clearly look at the long-term triggers, so one of the large overweights for us is financials, as I said. Yeah, within that, banks are a significant chunk of our allocation, especially the private sector bank. Now, some of the issues that have been plaguing that sector over the last 2 years, especially on the the regulatory front, the increase in risk weight, certain other regulations which has kind of curbed the growth, and also the normalization of credit costs that we see. Those are some of the negatives that has played out in the recent past. But incrementally, as we are seeing, the liquidity in the system is kind of easing a bit. I wouldn't say the deposit headwind has kind of gone away, but relatively we see the impact of RBI infusion of liquidity in the system looks like that is going to take shape as we progress through the FY26. The other aspect is, of course, on the growth coming back, because courtesy some of these regulatory headwinds, we have seen the growth across the system also fall. So gradually the earnings growth also in this, the advances growth of the loan book growth across this also is going to move up as we go along. And, the most important point in terms of valuations, where we think, most of these banks are trading at relatively reasonable valuations, that kind of makes us positive within the banking space. There are some asset quality concerns, but we largely look at it from a perspective of normalization of credit cost, which is going to happen after after COVID, 2-3 years of fairly benign credit costs. Now things are getting normalized. So we interpret it that way. The other large, overweight for us, or allocation to us, is within the IT services, which is in the midst of turmoil a bit. If you see past 1.5 months, the outlook has kind of a bit deteriorated given some of the challenges that we are seeing in US. But if you were to think about it long term, it's very difficult to call out what would happen to discretionary spend in the immediate term, given some of the pressures that we are having in
Right.
US.
Right.
But if you were to look at over a longer period of time, it's been almost 2 year plus of no services, outsourcing growth in a
Right.
very single day. So that makes us positive. Yeah.
Okay, so banking, financials, and IT looking good. But Christy, I have your latest portfolio holdings from the 28th of Feb. It's 28th of March. We're exactly 1 month, after that. In this last 1 month, Nifty has seen quite a bit of recovery, if you could call it so, after the kind of correction that we've been seeing over the last couple of months. Tell us if you've made any changes in terms of your stance to your portfolio, anything that you have entered. Have you booked your profits? Have you booked a profit somewhere, or have you used this dip as an opportunity to buy? Tell us how you are positioned and if any changes at all that you have made to this portfolio that you manage.
Right, sure. So, in the last several months, I think somewhere our cash position sort of in the portfolio, which is truly a reflection of what we see with our portfolio companies, if there is not reasonable upside in the portfolio companies that we have. So, generally we either sell it out of some positions or trim, and cash as a result builds up, right? So our cash was close to around 17% somewhere in October. And now that has gradually come down. It is close to about 12% nearabouts. There are market actions which can move up. For example, if the equity market did pretty well in this month, so that might suppress the cash a bit. But broadly, we have allocated, quite aggressively in the market fall that has happened. And more recently, we've been adding to certain IT names, which is, corrected quite a bit. Some within the utility space, because again, within the whole PSU, things which, fall that we have seen, a lot of good utility companies have also kind of been hit pretty hard. So we have found some allocation within that. We've also added some position within the consumption space, but this is more to do with the durable space, where we think, the companies that we have invested in, there is a distribution channel, the optimization that is happening that should hold the company in good stead. So broadly, we have allocated within this fall quite a bit, and even more, if there is some more correction, would be happy to deploy more.
Right, Christy. So when you speak about all of these sectors, let me pick on the IT space, and let me get your thoughts on where are you seeing value in the IT space, because that sector is also under a bit of anxiety over Donald Trump's policies, particularly with respect to the H-1B visas. And of course, we've seen commentary from industry players that this is going to be a year of single-digit growth.
Right, absolutely. So, so there are two things to call out. Number one is, of course, if you were to look at the whole visa issue, which was quite evident in the first term of the Trump presidency, a lot of Indian companies have upped their localization effort and so on and so forth in the first term itself. So if you look at any large IT services player, the US revenues, bulk of the delivery in terms of, let's say, the on-site happens to local talent. It could range from anywhere 50 to 70% of the workforce therein, depending upon the company that we choose. So that risk to us is a bit less. But the more important, question is what will happen to the discretionary demand, which was, there were signs of it pick up, especially if you were to go by the last quarter commentary by most of the majors. Now, looks like there is a turn in that, because in the immediate term, what we are seeing is, if the US macros are not so conducive as it was expected, will the tech spend, continue? So there are senses, like, it is again very difficult to predict, but it has been a prolonged period of time where the IT services spend, I'm talking about the services spent by, let's say the largest vertical for many of the IT services would be banks, right? That has been pretty muted, and one cannot be looking at such muted growth for a very long period of time. It is post-COVID, and it's been over 2.5 years. Some of the COVID benefits, there was large TCV wins during that period and some part of it moved away. We think bulk of those discretionary cancellation and so on and so forth issues are behind us. So most of the growth would be driven by what we see as a current tech spend. So it might be very well muted for another 1 or 2 quarters, things wherein, after which things will settle in. But we think some of the large cap names, again, our preference within this pocket is towards the large cap. They are better placed in terms of wading through such issues that has happened in the past also. They can manage, the slowdown in discretionary consumption and so on and so forth. So FY26 growth might look a bit lower on the lower side. But if we also bring in the fact of valuations and you look at any other sector, relative bet within the other sectors, IT services still reasonably placed for the kind of return ratios that they operate. So I think we are fairly placed on the IT services from a longer term perspective, not just looking at the short term.
Okay, so that sounds good. And Christy, thanks so much for joining us and very candidly sharing with us your market outlook as well as your portfolio structure right now. But on that note, we'll let you go. On that,
if you like this video, then like, share and subscribe to ET Now.